Welcome to today's explainer. We are going to do something really fun today. We're translating the massive data footprint of United Bankshares, ticker symbol UBSI, into a crystal clear narrative about its financial health and value. If you've ever stared at a wall of financial metrics and just wondered what story the numbers are actually trying to tell you, well, you are in exactly the right place. Today, we aren't just looking at data, we are decoding it.
So here is our investor's journey roadmap for today. First, we'll look at UBSI stock at a glance. Second, the power of dividends. Third, revenue and profit growth. Fourth, measuring financial health. And fifth, finding the fair value. Let's just dive right in.
Section 1. UBSI stock at a glance. The first impression.
Right out of the gate, we can see UBSI has had a really strong run recently. The stock is trading at a last close price of $43.68. But honestly, the momentum is the real story here. They're posting a nearly 15% return year-to-date in 2026. The stock is currently sitting nearly 28% higher than its 52-week low, so the market is clearly showing some serious enthusiasm. But as focused learners, we don't just blindly follow the crowd, right? We want to know exactly why the stock is moving.
And it's moving a lot of weight. With a $6.1 billion market cap, this isn't some fragile microcap regional bank that could be blown over by a stiff economic breeze. No way. It has substantial scale and a really heavy footprint. This is a deeply established financial institution, which sets the stage perfectly for what we're about to look at next.
Moving on to Section 2, the power of dividends, rewarding the shareholder.
49. I want you to really think about this massive number. It represents 49 consecutive years of dividend increases. Just think about all the economic cycles, the recessions, the major global events that have happened over the last half-century. Through absolutely all of that, UBSI has managed a streak of undeniable payout reliability. Next year, they are poised to hit half a century of dividend hikes. That kind of track record is incredibly rare.
But look, a streak means absolutely nothing if the current dividend isn't safe, right? We're looking at a current yield of 3.48%, but the crucial point here is that payout ratio of 45.59%. This metric right here is your safety gauge. It means UBSI is giving out less than half of its net income to shareholders to maintain that impressive dividend. They're keeping the majority of their cash in-house to actually grow the business. So that 3.48% yield isn't just attractive, mathematically speaking, it is highly secure.
Section 3. Revenue and profit growth. The engine. Now, to sustain almost 50 years of dividends, a company can't just stand still. We need to pop the hood and check the engine generating that cash. Over the trailing 12 months, the TTM, UBSI's engine generated a massive $1.836 billion in revenue. But as we know, top-line vanity means nothing without bottom-line sanity. From that revenue, they pulled in over $504 million in pure net income. So yeah, the engine is running, and it is producing massive amounts of cash.
And this brilliantly illustrates the real story. The accelerating momentum is just striking. If you look at their 5-year and 3-year compound annual growth rates for net income, they were hovering around a perfectly respectable 7 to 8%. But check out the most recent trailing 12 months, a net income spike of over 36%. Their growth engine isn't just running, it's visibly speeding up compared to those historical averages.
So they are growing fast, but how much are we actually paying for that growth? Well, that's where the PEG ratio comes in. Generally, a PEG ratio under 1.0 indicates a stock is undervalued relative to its growth. When we compare UBSI's current PEG ratio of 0.37 to its 3-year average of 1.44, we're seeing a massive 74% drop. The numbers are signaling loudly that you are currently getting major, accelerating growth at a really steep discount.
Section 4. Measuring financial health. Under the hood.
Any mechanic is going to tell you that an engine that runs too hot can explode. Accelerated growth is fantastic, but only if the chassis can actually handle it. This health check proves UBSI is a conservative powerhouse. An incredible 24.6% net profit margin means for every dollar they take in, they keep nearly a quarter of it. That is exceptional efficiency. Now, pair that with a tiny 0.13 debt-to-equity ratio. They are generating massive profits and impressive returns on equity without having to over-leverage themselves with a ton of debt. It is a phenomenally clean balance sheet.
So, what happens when you combine an accelerating growth engine with a rock-solid, low-debt foundation? Well, it directly translates into long-term compounding success. If you zoom out 15 years, USBI has generated a 214% return. They aren't just a flash in the pan. They have a proven, multi-decade history of executing on their business model and returning real value to shareholders.
Which brings us to Section 5, finding the fair value, the bottom line verdict. Considering the nearly half-century of increasing dividends, the visibly accelerating growth, and that bulletproof balance sheet we just reviewed, what's the final verdict on its valuation? Like, what is this stock actually worth? Well, here is the stark contrast. The market currently prices UBSI at $43.68 a share. But when you run a rigorous discounted cash flow model, which calculates the present value of all the future cash the company is expected to generate, the math values the underlying business at $55.65 per share. The market price and the mathematical intrinsic value are deeply disconnected right now.
And let me tell you, that disconnect is an investor's best friend. This price gap creates a 21.51% margin of safety. This simply acts as a cushion against risk. If the analyst's growth projections are slightly wrong, or if the economy hits a speed bump, you're already buying the stock at a roughly 21% discount to its true worth. It's exactly the kind of cushion intelligent, risk-conscious investors look for to protect their downside. And the really fascinating thing is, the broader market seems to be waking up to this exact value proposition. Returns are accelerating consistently. We saw a modest 4.26% in 2024, stepping up to 6.5% in 2025, and jumping to nearly 15% so far in 2026. Momentum is building as the market corrects that price-to-value gap we just talked about.
So what does this all mean? The data we've covered today paints a very clear picture of an undervalued, highly profitable bank with exceptionally responsible management. You've seen the 49-year dividend history, the accelerating net income, and that deeply discounted PEG ratio. The only question left for you is whether this unique combination of safety, income, and growth actually belongs in your personal strategy. With a 21.5% margin of safety, is UBSI the missing puzzle piece in your portfolio? Take these metrics, apply them to your own goals, and keep learning. Thanks for joining me on today's Explainer, and I will see you next time.